You're listening to Toronto's #1 real estate podcast, powered by Watson Estates. The most successful local real estate investing starts right here, right now. Here's your host, broker, investor, and social media influencer, Bradley Watson.
Good morning, investors. Bradley here from Watson Estates. Happy Tuesday, August 18th, 2020. Thank you for joining us. We are the largest, fastest growing podcast for Toronto real estate on iTunes, Spotify, and Google Podcasts. And today we're going to discuss the optimism and pessimism in our market. We all know an optimistic person created the airplane, a pessimist created the seatbelts, and we need both. So we're going to go through what are some of the headlines, what are some of the major news articles I as an investor I'm paying attention to, and as a broker for my clients, what do we want to know has been going on? And that's really been what our journey has been all about, is trying to stay in the loop with everything happening. And you guys know it's been quite crazy lately. So we're going to start off talking with, do Canadian real estate home sales, which were recently published, suggest a bubble? We're going to talk from various angles on that. Are immigration numbers rising? Or are they falling? And is affordable housing coming, or is it already here? You know what they say, the optimistic person says, the optimist says, the glass is half full. The pessimist says the glass is half empty. And the engineer says the vessel contains twice the required space for the volume present. Thanks again. Make sure you hit that subscribe, hit that like button, and we're going to continue to put out fantastic content and we stay in the loop on what is going on in our local market. So let's get into some good stuff. We're going to start off with talking about how high success in our market can be a cause for concern for some people. So let's begin looking at what the pessimists say, and what better place to do it than Better Dwelling. And this actually was the top article for this whole, they actually were summarizing what they did last week. And so Better Dwelling really takes the cake as it relates to this week's real estate updates. So here's what one of their top articles said that came out late last week. Canada doubled down on real estate in 2005. Now it's the biggest bubble the G7 has ever seen, and it's getting bigger. Dun, dun, dun. So let's see. So obviously here, Canada is, the market's doing really well, and they're agreeing with that, but that's a problem. And so we're going to listen to why that is a problem. Canadians know real estate prices have grown quickly, but most have no idea how it compares to the world. Well, I bet you're going to tell us. According to the US Fed, data shows how home prices evolved since the financial crisis. Remember when that took place? While most countries scrambled to balance home prices with local economic growth, Canada doubled down on housing. The result is Canadian real estate prices have grown at nearly triple the pace of any G7 country since 2005. Sounds like a good thing, no? All right, here we go. Canadian real estate prices increased over 3% last year. The Canadian real estate prices have seen growth slow recently, but not much. Canadian prices at the national level have increased 3.39% in Q1 2020 in real terms when compared to a year ago. Remember that stat? Because we're going to circle back to that. That is obviously Q1, and things have changed as we've entered and come through. And actually, now we're in Q3. So we've obviously had some progress since then. Interesting they chose the Q1 stats for this. But they say, to contrast, the US follows with a lower 3.29% over the same period. Canada is currently right in the middle of the G7 right now. They're talking about price increases, with Germany at 4.9 and France at 3.9 being the two markets above. Those are the two above us, but we're somewhere in the middle. So Canadian real estate prices grew at nearly 3 times the rate of the next G7 country. So ignoring the fact that we're on pace this year, since the financial crisis in 2007 and 2008, Canada leaned on the housing economy, and it shows. Canadian home prices increased a whopping 88% from 2005 to 2020. Maybe now is the year of jacking up the inflation numbers so that we can eat up all the mortgage that we've accumulated over the last few years. The next closest G7 country is Germany, with prices having increased 32.3%. Yes, that's nearly just a third of what it is in Canada. For context, the US real estate prices have only increased, I don't like how they say only increased, they have increased a whopping 3% since 2008. So obviously we grew more than the States. 88% versus 3%. What market do you want to invest in? Well, if you're better dwelling, you want to invest in the States for sure. Absolutely. Canadian real estate prices increased rapidly before 2015. Most of the price growth narrative starts around 2015, as you guys know. And that's when things went really crazy, especially in the condo space. But we can see the horse already left the barn at this point. Canadian real estate prices increased 50% from 2005 to 2015. So just because things went crazy in 2015 didn't mean that that's when it started. No. They got absolutely nutty up until around 2014, 2015. I remember it was a seller's market. People were saying, don't buy a house. Definitely don't buy a house. This is crazy talk. It's overinflated, overpriced, overvalued. Definitely don't want to invest. And prices went off the chain. And then in 2017, we're like, oh, no, okay, let's slow this down. Let's freak people out with the foreign buyer tax. But then condos picked up from there. And all the way up to 2020, nuts prices, completely unseen among the G7 countries. This is what this article is saying. Since the global financial crisis, Canada has leaned on non-productive investments, and it shows because real estate's apparently non-productive. For those of you who are looking to rent a unit, that's not productive, sorry. The rate of residential investment to GDP more than doubled from 2000 to 2020. That's just a joke, by the way. I know it's not productive. That's why it's passive income. This is why people want it. Last year, real estate transactions were generating almost half of all GDP growth. I'll say that again. Last year, real estate transactions were generating almost half of all GDP growth. So let's just stop paying commissions. That'll help our GDP for sure. Absolutely. Also I'm sure I'm poking the beast on that one too. All right, but Better Dwelling, they'd call themselves, if you ask them, they would not say, we're not pessimists. We're optimistic pessimists. They're positive about that things will go wrong. we are positive that things are going to go down the crapper. All right, so let's look at the other side. So that's Better Dwelling's argument. So prices are going so crazy good. They're so high that we got to watch out. Red flag, red alert. And these red alerts have been going off for years. Well, let's look at what CP24 has to say. The Canadian Real Estate Association says home sales hit record high in July. What is going on now? Because those guys were looking back in Q1. Well, how about today? Are we still up, 3-4% as in line with other G20 countries? Oh no, the train has definitely left the station. The Canadian Real Estate Association says home sales in July hit a record high as they continued their rebound from the lows of earlier this year. Remember, earlier this year, Q1, that was the lows. Right now, the lows got really bad in March, right? March and April. July 2020, listen to this, marked the highest monthly sales figure on record. Highest on record, going back more than 40 years. And I'll bet you there probably weren't more sales happening 40 years ago, just based on the amount of inventory. Sales in July were up 30.5% compared with the same month a year ago. So sales are up 30%, okay? On a month-over-month basis, sales were up 26%. So all of the craziness seemed to happen at the end of June into July. And July marks, in my opinion, the peak, but we're going to get to that in a second because there's people that are suggesting maybe August is getting an overflow as well. The jump in sales came as the number of newly listed homes climbed by 7.6% in July compared with June. So here we go. We got a number of sales climbing. We got a number of new listings climbing. But this CREA says, this is not just Toronto, guys. This is Canada. They say the actual national average price for homes sold in July was a record $571,500, which is up across the country 14.3% from the same month last year. We are all doing fantastic. And add the fact that the Canada dollar compared to the States, which is also big news, we don't talk about it as much here, it shows us that the value here on a global basis, we are doing very, very good. We are doing very good. We are prospering here. Given the difficulty that oil has had, we are doing great. Or maybe you could better phrase it and say, as a optimistic pessimist, that the States is the States is doing the opposite of good. We are optimistic that they're going to crush their dollar, and a lot of countries are very nervous about that as well. But we should be celebrating, in my opinion, these prices. No, isn't that like, as an optimist, I don't have a drinking problem. I have a drinking opportunity. These things are going to make you want to drink. Then we see posts from John Passalis. There was creating FOMO. This is the best way to create FOMO. One post at a time on Twitter. And they're updating us on August, because why do we need to look at July when we've got half months of August behind us? Well, here you go. This is why I'm suggesting last month, it was my understanding, and it still kind of is, I'm not convinced this month will beat it, but it's looking like it might, is last month I anticipated that would be kind of the peak spring market. Now, the challenge that we're going to get into a second is that apparently last year's August wasn't so good, and so these numbers are actually even more inflated. But listen to these stats, okay? From mid-month, so half of August this year, half of August last year, low rise. Let's start with the low rise. The sales are up 54% year over year. That's very high. And prices are up 18%. So if I were to just give you a reminder here, last year they reported that so as the number of sales were up for last month, they were up 29.5% in July, which was really good. That's 30%, right? But now, first half of August, they're actually up 54%. So sales activity seems to be rising again. It was going down, but now it's going up again. Maybe that's because people saw that there was so much joy in July that they're like, hey, well, we were clearly like, not let's get on this train. Let's do it, right? The other side of that is the number of the prices. So last month, we thought, you know what, prices are crazy high. 16.9% price growth last month, July. Well, now it's up at 18% for the low-rise segment. And of course, this is just saying we still have, whether it's better or worse or whatever, we still have a pretty stellar first half of August. And the low-rise new listings are up 35%. So if you consider sales are up 54, new listings are up 35, there's still a squeezing happening on months of inventory, which will carry over into the next year. So on the low-rise segment, we're still looking quite healthy, even though when we compare last year with August, those numbers are actually a bit lower. It actually will inflate our stats for this year slightly, which I think is what's kind of coming through there. But anyways, let's look at the condos, because it's not all inventory is created equal right now. Condo sales are up 14%, so not 54%. Sales are up 14%, and price is not up 18%, but they're up 13%. Still pretty good. But when we compare, this is where I'm watching still, and why I'm not giving a green light yet, at least with my investors on condos, is that the new listings on condos are up 89%. So when we compare that with sales up 14%, condo new listings up 89%, you're going to have rising months of inventory. And months of inventory already sits at 2.2 months of inventory, which is still a buyer's market. But in comparison to the low rise at 1.3 months of inventory, it's high and it's probably going to go up. So there's still going to be a buying opportunity. Doesn't mean jump in. But I'm interested in seeing this because it tells me that maybe we have a longer lasting spring impact than I originally thought. It'll be interesting to see when we get the full round in August what that looks like, again, in light of a weak August last year. And of course, we have quickly rising condo inventory, which we need to be paying attention to. The one who cued me into this was Toronto First, who left a comment. The only reason of doing mid-month, knowing that we had a normal, typical, slower August last year, is FOMO buyers. FOMO, right? So creating this FOMO. But I mean, at the end of the day, just because you provide the stats, are you creating FOMO? I mean, maybe. I guess it depends on if you're getting caught up in the FOMO, but we don't do that around here, right? Because we're out there buying it anyways. We're the first movers. We ain't missing out around here. And so I wanted to quickly pull up just to share with you what they're talking about. I looked at the sales for last year. When we look at the sales price changes and we look at the number of sales activities, so last August, from month to month, so we're talking July into August, we did see August went down 65.65% from the July prior. And we also had a dollar figure drop of $5,000. So prices did come down last year. So if we're in an environment now where prices are kind of going up, sales are going up, and it hasn't curbed yet in comparison in light of a typical August, in fact, a lower than average August, we would naturally see those numbers, that spread being higher. But here's a kicker, guys. As we look into September, okay, September monthly change from August into September last year is up 7.56%. That's a big jump. In fact, that is, as I'm looking at it, the highest jump of the entire year last year in month over month. So September, this coming September in comparison to last September, it would be very interesting. If we can continue to top these numbers, holy smokes, I would be shocked. But it's interesting to see the success that we've had the beginning, the first half of this month. And so hopefully that gives you some insight as you're looking to what's going on. And I do get the occasional question. Thank you, W, for your comment on YouTube. What happens if you have a one-bedroom, an investment property with cash flow downtown, but can't sell? Should I lower my price or keep it rented? Will there be a crash? So the fact that he's already on the market and can't sell is just indicative of how rough it is to sell a unit right now. Should I lower my price? Well, the answer is if you want to sell it, you will need to lower your price. I mean, that's the reality. And the question is, are you prepared to take a lower price in order to dump that thing? I mean, if you're young, you got lots of time, don't feel so rushed. Don't sell at the lows and make sure you buy at the lows, sell at the highs. If you can structure yourself properly and creatively as an investor, maybe you can get in on a buying opportunity without even selling that unit, right? And will there be a crash? Perhaps. If it's going to happen, it's going to be in the condo space unless we get something even bigger that happens on a global scale, which, I mean, that's way above my pay grade. But looking into the coming months, of course, we're going to have a little bit of difficulty in the condo space. What I would have done, instead of listing it, had you been listing for the last month or so, is I would be locking that tenant down. I would be actually getting a longer lease. Make sure you have them for a year, because just as it's difficult for you to sell that place right now, it's also difficult for that, or it's actually more advantageous for them to leave you. And we're going to get to what rents are doing shortly from rentals.ca. So I would lock them down and then recycle this thing until late next year, when the condo prices are going to be comparing against a weak condo market this year. We're talking namely the fall of 2021. And I think things are going to look a little bit better than they do right now. But that's up to you, man. If you need your money, then feel free to dump that sucker. But if it were me, I'd hold on to it if you can. And hopefully you haven't pissed your tenants off with already trying to list it. All right. Okay, moving on to our next topic, this idea of immigration. And you guys know we got optimists, we got pessimists. Like how long before people come back to our city? Like how much time? There's nothing more optimistic, if I were to look to optimism, like how much time you have for these investments than an old guy who buys green bananas. So are you optimistic about where things are going to happen? Are you thinking people are going to come back to our city? Are you thinking people are going to run from our city? And so as we're talking about this, a big component of it is immigration. And here's my segue, my very poorly organized segue. Better Dwelling, let's start us off, buddy. Here we go. Canadian immigration slows further as new permanent residents drop over 44%. I love how we can all have the same stats. Because what do they say? Numbers never lie. Well, people are somehow managing to lie with the numbers, the same numbers. One of the driving forces behind Canadian real estate prices is on hold: immigration. The Government of Canada data shows the number of newly admitted permanent residents to Canada still making sharp declines in June. Oh no. Oh no. Permanent residents to Canada down over 44%. They actually corner themselves in this article because they say this: the number of new permanent residents arriving in Canada is on a decline. There were just 19,000 some odd people admitted in June, which is down 44% for the same month last year. And this is comparing to year to date, which is 35.5. So what they're saying is the annual decline is softened by large growth in the first 2 months of this year. Even with that increase, we're still seeing a lag in growth. So what they're explaining here is that January, February, we had still high immigration numbers. But since then, it's been especially low. So that's fine, and that's okay. But they end up cornering themselves because they say this: Ontario is where almost half of the total permanent residents admitted moved. The province represented 9,000 permanent residents admitted in June, down 41%. Year to date, we are at 35.1%. A larger monthly decline than year to date implies declines are getting larger. You can't have it both ways. I find that crazy. So here, let me explain what they just said here. So they said the numbers now are higher than they were before, and therefore it's worse. Right? And the fact that's what they just said here. But when they're saying they a minute ago, they said the annual decline is softened by large growth in the first 2 months. So the numbers are softened because the first 2 months were higher, like the immigration was higher. And I can't see, like they literally just made both opposing arguments. It's like, so are we getting better or worse? Because the argument seems to be here that we're getting worse, yet the numbers they're worse because of how it's so confusing. So confusing. Like, why do we have to be so upset about this? like, do you guys understand what's happening here? You probably don't. If you don't, that's okay. But okay, so these guys, they gotta get a little more optimistic. Okay, so we got to give them something to drink. Like, what's an optimistic vampire's favorite drink? Be positive. So let's see how immigration can be sold as a success story. Because clearly here it's like it's getting worse. It's worse than it was in January, February. It's getting worse. It's going down. It's getting bad. And okay. Let's look at the other side. Let's look at optimism here. Growing immigration as a success story. This comes from CIC News. Canada welcomed over 19,000 immigrants in June. So we're talking about the exact same month. This was published on August 10th. It was released. Canada's immigration level in June was the highest since the start of the coronavirus pandemic. Well, didn't hear that in the Better Dwelling article. I'll say it again. Canada's immigration level in June was the highest since the start of the coronavirus pandemic. Okay. So maybe if we start our time frame for analyzing immigration as of March instead of January, we'll get a better picture on if we're getting out of this or not. Is that fair? Is that fair? I think that sounds like a more legitimate way to analyze the data, but that's up to you. Canada welcomed nearly 9,000 new permanent residents in June. This was revealed in the IRCC, the Immigration, Refugees, and Citizenship Canada data released again on August 10th. Canada's June permanent residence intake was much stronger than the 11,000 newcomers in May and the 4,000 in April. So here we go. 4,000 April, 11,000 May, and now we are at 34,000 in June. So we have gone up quite a bit. In fact, that is more than threefold. Think about that. The lower level compared with last year is due to the disruption caused by the pandemic. Of course, let's not ignore the fact that it is lower. It is lower. It's so much easier to sell that story. Immigration is going down, but they got this pretty little chart that sure looks like a V chart to me. Now, here's one thing to keep in mind. A couple things, actually. One, immigration has not changed. Where people are coming from has not changed. The number one place being India, 6,700. China, just over 2,000, and then the next is the Philippines, down 900, so it's significantly dropped off from there. It's interesting the States is only at 740, so people aren't moving here yet. All that talk, but don't do it right now. Just don't do it right now. What is expected for 2020, according to this article? They figure that Canada's immigration system is, quote, normalizing to the extent possible during the pandemic. More people were able to overcome COVID challenges in June, for example, travel delays, than prior months to complete their PR landing. So we have seen clearly a boost in the number of people coming to our country. And they tend to be higher in the summer. So over the coming summer months, we should expect immigration levels to remain at the same range in the June level. So don't expect this rise to keep going up. It's not like we're going to go up and up and up and up until we hit that 100,000 coming to our province. Actually, 100,000 is to, I believe that's Ontario. I can't remember if it's GTA or Ontario. But we're going to have a lot of people coming here at some point, but don't expect that to happen in the next few months, is what they're saying here. A couple interesting facts. It sounds like there's different incentives that they give to people that I didn't know this. So they said that there's something called the Express Entry Draws, which includes something called the FSWP, Federal Skilled Workers Program, plus ongoing provincial nominee programs. So they have these different programs, which are draws among numerous positive signs. So apparently the FSWP was excluded from the Express Entry Draws. So I don't know how all that works, but it sounds as though they were actually slowing down immigration. They were making it so we didn't want to flood of people. We wanted to allow the people who definitely need to come here first. And that's going to happen through till July, at which point they're saying it's going to open right up, right? Which is a good sign because we're not holding people back. But the result of all of this is, if I were to kind of update you guys on the latest news here before we move into our last topic, is there's no more immigration. There's no more agreement on how schools should open in September, and there's no more no. And that's a bit of an update, but here we go. So let's talk about rents. Okay, we'll talk about rents. We had our buddy down there that was asking us, W was asking us about how that all works. So let's talk about what's been going on in rents. We talked about a couple days ago, PadMapper, we discussed that one. So we've got other stats now from rentals.ca, obviously a significantly larger pool of properties to work from. And before we get into the stats, which is my opinion, talks to a lot of affordability in the city, we're going to talk about how there is not enough affordable housing. Because again, optimistic, pessimistic. Here's the pessimistic side. We have a ton of money now being thrown. So I'll give you some examples. This comes out of the bottom of this article, but at the top because I thought it was better here. The CMHC announced $73 million investment from the federal government to construct a 233 residential rental homes at 5465 Dundas Street West. And this is part of the KIP district. So there's some money being thrown in order to help affordable housing. Earlier this month, CMHC announced $276 million commitment to affordable housing in Peel from the federal government. They announced $79 million in financing to construct 216 residential units in Newmarket. So there is a lot of money being thrown out even now to build up affordable housing, because it says this: the COVID-19 pandemic has not made finding affordable housing much easier, particularly for families. Okay, so here's our conflict. We have a huge need for affordable housing, yet we have a huge opportunity to find something affordable in the city. Rentals are significantly cheaper this year than we've seen. Toronto rent dropped by 22% downtown in July, says a report. This is from rentals.ca. The average price for condo apartments in the M5H area listed on the site is $2,444. That's down 22% year over year. That area is the financial district. It suffered the steepest declines, followed by the South Core M5A or M5E area, which dropped 16%. The M5A area, stretching from St. Lawrence Market to Regent Park, dropped 12.8%. The M5V, which is the fashion entertainment district, dropped 11%. So right downtown core condos are getting a slapping year over year. According to rentals.ca, downtown condos rent peaked at $2,740 in August 2019, and the current average fell 16% to $2,302. So if they peaked in August of last year, then next month we're of course probably going to see in the stats rent coming down because they were going up so quickly. Even if they don't come down, year over year they're coming down. Hopefully that makes sense as well. So I would expect you're going to see the year over year drops in rent continuing into next month. Now, I guess this would be this month, August. However, we have to look also at the month over month. I think that's important because who cares? This is a different day. This is the post-COVID or during COVID. What do you call the middle? Pre, post, just COVID era. The average price is down for Toronto rental listings overall. The average rent for a one bedroom is down 9.3, decline year over year. But what's our monthly? But only 1.9% since June. So we've seen less than 2% drop or around 2% drop from June into July, and again into August. It'll be interesting to see that month over month, but it's not dropping nearly as fast. According to Treb, rental listings during the COVID pandemic were up 42% year over year. Meanwhile, rentals were down 24.8%, and we've talked about that before. But according to rentals.ca, the average price for a two-bedroom apartment in Toronto went up 1.3%. So here we go. On the other side, two bedrooms are actually on the upswing again. So I think we're nearing the bottom. I think it's good advice to tell people lock in your rentals now. It's also good advice for landlords who maybe have tenants that don't realize the opportunity they've got to lock those guys down now. Anywhere close to the rate you've got, I would try and get that if you can. The pessimist says everything is terrible. It can't get any worse. To which the optimist replies, oh, yes, it can. So I'm going to write a little love letter before we wrap this up here. Dear optimists, pessimists, and realists, while you were arguing over the glass of water, I drank it. Much love, opportunists. I hope you guys don't get caught up in the FOMO. I hope you guys don't get caught up in all of this. And also, what's the opposite of FOMO? Fear of missing out? Fear of jumping in? The FOJO? Oh, Foji? I don't know. But we're here just to analyze the facts, figure out what's going on both sides so we can make our investments accordingly. Make sure you give us a thumbs up if you liked the content here. Make sure you follow us because we're going to continue to put out fantastic content. We are the largest, fastest growing podcast for Toronto real estate on iTunes, Spotify, and Google Podcasts. I'm going to leave it there. I'll see you next time. Take care and keep it real.